Welcome to Real Estate for Real. I am Eric Pettigo. Appreciate you tuning in once again. I took a week off last week. I was out of town. But while I was out of town, my friends here today came to our office and did a presentation for the agents who showed up, talking about what's going on in the lending world as far as underwriting and AI getting involved and things of that nature. Stuff that, like I told you guys before we started recording, realtors flip out about because anything new and anything that indicates change is terrifying in our world. So joining me today, Greg Formigoni, Brad Dyer, both from INB. And guys, I appreciate you coming in a second week in a row because I missed last week. So this is very self-serving of me. I want to have my own private
encore.
Yeah. Right.
Performance.
Yeah.
Right.
So you guys came last week, and like I said, I watched the replay. It was very informative. You did a great job.
Thank you.
But this is, instead of a presentation, more of like I'm going to fire off some questions, some concerns, some stuff that in the realtor circles is kind of getting talked about, and see if you guys can maybe help us clear it up a little bit. If you can, you can. If not, then we'll find out as we go along.
That's right.
I mean, that's part of what we do. So Greg, just quick background. What's your story in lending? How did you land where you are today? Just so people get to know you a little bit.
Yeah, long story. I'll make it short. I've been in banking since the late 80s, so about 30 years in the mortgage industry.
Okay.
It's just something that stuck and I enjoyed doing, and I don't know if it's the pace or the stress or, there's something. To be in the real estate business is an interesting, every day is interesting. So
you're not lying.
And I think that's the perspective. That's the perspective we wanted to share, right? 30 years in the mortgage industry, this looks nothing like when I started. I mean,
right.
It looks a little like when I started, but it is a lot more hoops to jump through. And things do change. To go to your opening statement,
yeah,
that's the reality of what we live in every day is change, right? New regulation, new requirements, new this, that, the other. Each one of them always feels devastating.
Yeah, right?
Right?
Terrifying.
How are we going to manage this? And yet you do,
yep.
Right? And so this is the latest change and the latest obstacle that we're going to figure out how to get over and still continue to help people get into homes.
I like it.
Yeah.
Brad, your turn. How'd you get here, buddy?
Well, started in banking probably mid-'80s as a part-time teller and just can't get away from it.
got its hooks in you, didn't it?
It did.
Yeah.
It did. I did other lending prior to getting in the mortgage field, so I thought mortgages would be easy. And again, I was
funny.
proven wrong. Probably about 25 years in mortgage itself and 30 some in banking itself too, with it. So it's in our blood. We joke about people not ever getting out of the mortgage world. So,
oh man,
if you do, you come back, and it's weird.
That's such a parallel with what we do. I mean, realtors don't retire.
Yep.
That's not what they work until it's over, and then that's it. So they might spend more time down in Florida than they did in their early years, but they're still here and they're still selling a few houses every year. So
transition, yeah.
And that is my plan. Well. I'm not going to quit selling houses.
Good.
I am going to spend less time here the older I get. Is my plan. So the kind of the hot topic, and now we've discussed it 2 weeks at our weekly meetings here, is what's going on because people are kind of freaking out a little bit. I'll give a few examples. I've had 2 transactions recently. One house is probably 110 years old, and the buyer was as is deal. Everybody agreed, as is, no inspections, no nothing. It was an old house. It wasn't very expensive. The appraiser came through, and there was a plaster hole in the ceiling. It was all plaster. It's an old house. The hole was maybe 8 inches circumference. Nothing big. I mean, it's typical. Old house, plaster starts falling off a little bit from time to time. In the bathroom, there was a substance that had grown on the ceiling a little bit. I don't know what it was. I don't test it, right? But I don't think that was a design like on old wallpaper, which is what it maybe could have been. But the appraiser took pictures, as they do, as they should, as is their job.
Right.
Underwriting flagged those pictures.
Yep.
We had to patch the hole in the ceiling.
Yep.
And we had to go kills and paint over the ceiling in the bathroom. No. But for us, with a conventional loan, as is, we're not used to anything coming back and saying, hey, this needs to be done before we push this through.
Right.
So that's kind of the change now, right? So can you shed a little light on maybe why those things happen?
No, that's a perfect example. Yeah. And I think I know about that deal. I remember hearing about that deal.
Mm-hmm.
But
you know my friend Bill Townsend?
I do. Yes, okay. I do. Yeah. And Bill and I talk a lot. But Eric, that was kind of how we landed here last week, right? Was getting feedback. This transaction was one that INB handled.
Yep.
But prior to that, I fielded similar questions from other agents who weren't necessarily working with us on that transaction and came to me and said, what they were venting about another bank, right?
Sure.
Another one of our local competitors. And I had heard that before, and it was brought to me, and I think the reaction that was expected, that I was going to say, oh my goodness, I can't believe they're doing that to you. That's
right.
So wrong. Come to INB and it'll be better. And I was honest, and I said, I understand. I understand what they're doing, why they're doing it. Mm-hmm. Let's talk about it. Right. And so I think this is a good conversation because it is not a bank specific requirement. This is pressure from the industry, Fannie Mae, Freddie Mac, using new tools and changing the rules. To your point, conventional financing, that used to be the easy path. It continues to be, quite honestly, the easiest path that we go. It's a conventional mortgage. The rules are much less than if we go into an FHA, VA, government-backed loan. But at the same time, it is no longer anything goes. And I think some of that is the history, the housing history, right? Mm-hmm. I mean, again, doing this 30 years, we went through the housing crisis, right? We went through, everybody always figures real estate appreciates no matter what. And that doesn't. It's a bit of a roller coaster.
Yeah.
Right? And so I think based on what has happened historically with Freddie and Fannie and foreclosures that they may have had, everyone is protecting their interest. So there have been a lot of rules coming out.
Yeah.
And one of those tools, one of the biggest changes I think in the most recent 5 years is the technology piece. Right? You alluded to AI, and I guess the one thing I want to point out is INB does not use AI to underwrite our loans.
Right.
There are banks moving that direction. There are banks, large banks, that are using AI to replace people. That's not what this is, right? And that is that we are, again, it's people like Brad and I that have done this for 30 years. That's who INB is, right? We are people with experience that know the community and know what we're doing, hopefully. Right? we tell ourselves that.
Yeah.
That the industry as a whole is adopting AI as both, in their view, a way to create more efficiencies and streamline. Because the hard part about mortgage lending and real estate in general is it's not like buying a car, right? You don't go out, pick the car, 2 days later it's parked in your driveway. Right? This is, at best, a 20 to 30 day process with constant pressure to make it shorter. Mm-hmm. Right? That's fair. It's my house.
Sorry about that, guys. That's us.
It's everybody. No, I mean, if you think about it,
you guys can do this in 3 weeks, right?
Right. It's the buyer too. Buyers are eager to get in, right? Everybody wants to settle faster, but there's so many steps, obviously, that we take care of behind the scenes together. Sure. But yes, this is a new tool, and this is definitely a change.
So for the people, because we have a large audience of realtors who listens to this. Yeah. But I also have just people who listen to this who are not involved in the real estate industry. And what I've found is, almost everybody has some sort of interest in real estate, whether they want to own it or they do own it. But everybody is kind of interested and curious as to how this stuff works and what goes into it. So you mentioned Fannie and Freddie.
Yes.
And when we talk to each other, we just throw it out there because we know what we're talking about.
Fair.
Sure.
For somebody out there interested in maybe buying a house saying, what is Fannie and Freddie?
Right.
Yeah.
What is Fannie and Freddie?
Well, let's back up a little bit. We'll use a couple different terms in the industry. Greg talked about government loans. Those are not what we call conventional or conforming loans.
Right.
So there's a difference in the types of loans. The government loans are backed by the government, so that's like your VA, your Farmers Home Administration, your FHA. Okay, those things always had safety and soundness appraisals and some other things that came along with them, but that was the biggest problem or
hurdle, yeah.
Let's call it, for those types. Fannie and Freddie came in. Fannie came first, way back in the 30s and 40s. When it first came about, it gave banks the opportunity. A couple things on there. It standardized the mortgage process itself. Freddie came on a little bit later with it, but it standardized the mortgage process itself, and it gave lenders the ability to keep loaning money. Before that, individual banks would finance the real estate purchase, typically on balloon loans, short-term balloon loans. And a balloon loan is, you think of a balloon floating in the air, you have a small string, which is your payment, then all of a sudden it's due.
Yeah.
And that's the big pop that that you're going to face, right? But that's all they did was lending. Well, now Fannie Mae came in and said, no, we'll do 30 years. That was a big deal and things on there. All of a sudden, you didn't have to worry about refinancing or do anything like that. Like I say, it lowered the risk for the lender itself as well, because now everything's standardized. We're not loaned out because banks have a capital to loan ratio that we have to hold on to. Doesn't matter because Fannie or Freddie get these loans in the end. So we like conventional or conforming loans because they're usually a better deal for the borrower. Mm-hmm. Again, there's some discrimination issues. They take away all of those things. There's some funding issues, take away all that. Risk is standardized and it's spread over a course of everything. So we want to do those kinds of loans because more people can afford homes
Sure.
and get into homes. But now that landscape is changing where the conventional loans, we weren't so worried about appraisals, which is what we're talking about mainly today with it, because when we first, Greg said it last week when we were here. When we first started doing this, we got appraisals hand delivered to us. They were typewritten, each one. Yeah. And I'm not kidding. Appraisers would come around and drop these things off maybe once a week. Polaroid pictures taped to the report itself.
See, they should have to still do that, I think.
Well, we'd never get them then, probably. But it's changed so much.
It was pictures.
Pictures were front of the house, the back of the house, and the street scene. That was it.
Yeah.
You had a house standing there, you were good. Now we see a photo of every single room, front, back, every room in the house, basement, garage, anything. And so that's what's caused a little bit more of the what we're talking about today, because now they have the ability, whereas years before they were only auditing maybe 5% of these appraisals. Now all of a sudden they have the ability to audit every single appraisal that comes in. Not just 99 kind of thing on there. It's almost 100% of everything that's coming in there. And it is incredibly good with AI at photo recognition. So all of a sudden you have somebody who can look at every single thing you're delivering to them, and if there's a question or a photo that raises some concern, they know.
Yeah.
And before like Greg said, this came out in 2023 where they were telling us they were going to do this, but until you actually have a loss to this, you don't look at it.
Right.
You think about it and you go, oh, okay, well, that's not that's going to be a game changer, but you don't know it's going to be a game changer
until it actually changes your game. You don't really
Exactly.
think about it. Yeah, and that makes sense. And so Fannie and Freddie, entities that buy loans from banks, right?
Yes.
So
Big government
big
sponsored
government
enterprise.
sponsored. Yeah, sure. Okay. So that makes good sense. And so this is where kind of the issues are arriving is Fannie and Freddie are kind of, tightening up a little bit their regulations because they're able to now. They're able to monitor each of these more closely than they were before, and because they're able to, now they are able to mitigate on their end potential risks on these properties.
Correct.
Right, and so that's the root of it. And so then when it for you guys, for the banks now. And this is what I sent out a company email because we had a whole email thread, and I said, let's take it easy on our lender friends because you guys are going to take the heat for this. When your underwriters kick it back and say, hey, what's this hole in the ceiling? Hey, what's this stuff? This needs to be fixed. Our initial response is going to be, hey, what are you talking about?
Right.
This is conventional as is. Why are you making us fix this? But it's not you.
No.
It's because for you to sell it up to the next level, that they're going to spit it back and say, whoa.
Yeah.
You guys shouldn't have bought this. This is...
That's exactly, and Greg can speak with this a little bit better, but you have representations and warranties that you are responsible for delivering certain things to Fannie Mae, and all of a sudden you've taken away. Let's face it, on a mortgage, the collateral is the mortgage loan is probably the most secure loan that you can get, right?
Right.
Because we know we've got collateral behind it. Now you're going, well, wait a minute. What's the actual value of that collateral? Is it tainted because we've got a hole in the ceiling or foreign substance in the bathroom?
Who knows what that
we
was?
don't know.
I don't know. Yeah. Who knows?
And they're not saying it's wrong or anything like that. They're just saying you got to look at it
Right.
now.
Yeah.
Is that
Yeah, well, to go back to what Brad said, the partnership with Fannie Mae and Freddie Mac, that is the bank's ability to do fixed rate lending.
Right.
Right? You lose the good graces of that partner. Brad and I are no longer doing 30-year fixed rate loans, and you are not introducing us to any new customers because we don't do 30-year fixed rate loans. So it's one of those, I'll be honest, it's a partnership, but it's a necessary evil.
You got to have it. Right.
And there is oversight on our part and due diligence expectations. And if we don't perform, it's financial consequences.
Sure.
Right. And so I think what you are seeing realistically from us and our peers and other banks is you're seeing banks act in a more defensive way. Mm-hmm. Right. Instead of, because now I have to worry, is this loan going to be accepted when it gets audited, right?
Yeah.
Are they going to be worried? Is there worry about collateral? And if we do not address something, your example is a perfect one, right? Because it used to be the banker's call. We would look at the collateral. We would determine at the bank level if it met secondary market requirements, right? Mm-hmm. And we were accountable for that. The technology has allowed for more automation, which brings more accountability. Right. Yeah. So again, to Brad's point, if every piece of work that you do gets audited, right, then every piece of work you do has to meet minimum expectations so that you can stay in business and continue helping people.
Yeah.
So it is truly one of those things where, granted, it's fair, I think, that we take the criticism, and I'm certainly not here to defend the secondary market. That was one of the things I said last week. I can explain to you our perspective. This is not at all a justification on what is being done and the way it's being implemented.
Yeah, you're not advocating for the, but it's the reality of that none of us have a say so in it. So we just have to make it work with the parameters now that they've set for us. So that's all we can do, right? And us working with you, that's all you guys can do, and that's all we can do as realtors is to understand the best that we can maybe what's coming and to educate our clients as to, hey, this might be something that we run into down the road, just so you know.
Right. Right, because like you said, you negotiated that contract as is.
Correct.
So those things didn't just pop up in a week after you signed the papers, and there's
Right.
something in the bathroom or the hole in the wall kind of thing on there. So everybody saw that, and you agreed to it and things on there. But Fannie didn't agree to it,
Right?
Or Freddie, I should say.
Yeah.
So they're looking at it, going, "Well, wait, it's not bad, but we just have to check it out and make sure did it get taken care of with the kills? Did the hole get patched? Okay, we're good to go."
And so I think what realtors need to remember is we tend to focus on one part of the contract where it says, no, this is as is. But there's another important part of that contract, which is the loan approval. The mortgage contingency, the financing contingency is part of that too.
Correct.
And so if the lender, for whatever reason, is saying, hey, we're not pushing this through until this gets handled, it's the same thing. That's something then that we have to handle. It doesn't matter if we say as is or not. None of that matters unless it's a cash transaction. So we have to work together to kind of figure out the best way to go about this. And so in an instance like the example I used, that buyer had the full intention of, after closing, gutting that house and remodeling it. So the hole in the ceiling didn't matter. That whole ceiling was going to be gone, right? So when that's the intention moving forward, one of the questions we had pop up today is, so I think the fear for the mortgage companies are the potential buyback, right?
Correct.
And then having to kind of assume that loan yourself, and that's not the business
and
plan,
penalties, right? Because that's the other thing. Not only do you buy back the loan, which means if we do we do a loan on a $500,000 house, we get a bill not only for the $500,000, right?
Right.
But then there's penalties imposed as a punitive thing.
Oof.
Right.
Okay.
So not only do you get knocked backwards, but you get punished.
Right.
Right. And again, INB's been around a long time. Our job is to make sure that we continue to stay around for a long time. And so you've got to kind of balance that risk.
So the question is there a time frame, right? So we close. All right. And now in the next 2 to 3 weeks, whatever issues that were there are corrected by the buyer after closing. Whatever issues that may have been flagged as, hey, this, whatever Fannie and Freddie may have said, hey, this is a problem. We're not going to buy this. You guys have to handle this yourselves. But if there is documentation, if there are pictures, if there are invoices of work completed after closing, can you then present that to them and say, hey,
unfortunately,
look, this has been done. This has been completed. Everything's good. We closed on it the way that it was, but now everything is fine.
Yeah, you could even have it looked at, like the foreign substance in the bathroom looked at, but if it's after the fact, after we've already delivered it to it, and it could come in and say, yeah, it's no problem, it was just discolored or something to that effect. But you still have to cure it before you deliver it to them. So am I saying that right, Greg?
Yeah, and I think there's a couple of, can that be done? Maybe,
right,
under certain terms. And here's how we typically handle that. And here's a good example. Sometimes we go in and there is, now I understand the hole in the ceiling felt like a minor thing.
Yes.
Right? We have, I think I have a transaction right now. Septic system isn't working. Septic system failed. Kind of important.
Yes.
Right? I'm coming in there with my family.
Much more important than a hole in a 110-year-old plaster ceiling.
Same thing. Nobody wants to address it prior to close. We'll take care of it after closing.
Right.
What we are doing in that particular situation is we are extending our rate lock, okay? Because the day we sell that loan to Fannie and Freddie, which is usually shortly after closing, usually within 10 days of closing.
Okay, I was wondering that. So how long before it gets sold to Fannie or Freddie?
Right. So when you're prepping to buy a house, when you find the contract, we are typically locking your rate for a certain period of time. Mm-hmm. That period of time isn't just to get you to closing, it's to get the loan to closing and to ultimately deliver it to Fannie Mae or Freddie Mac. Now again, banks go with usually one or the other, we have relationships with both.
Okay.
Right, so that we can use both as options. Right, more options,
Makes
more
the most
success.
sense. Yeah.
But the day we deliver that loan, we are accountable for it being meeting guidelines.
Right.
Right. So even if that borrower, I sell the loan tomorrow and next week the borrower goes in, takes possession of the house, corrects all of those things, and I have proof of that, the response will be, the day you sold us that loan, you did not meet guidelines. Here's your loan back.
Wow.
Right. So what we do sometimes is say, okay, wait, if that's the situation, then we can accommodate you with some additional time. How much time do you need? That was a conversation with the septic company. How much time do you need to install the new septic tank? We will extend our rate to give you that limbo period,
Right.
to where you've closed the loan, you are doing the work, we can certify the work is done, and then it goes. But there's a cost to that. The longer keeping that rate lock open is an expense to the buyer. So that's not, we're trying to keep costs down.
Of course.
My other thought is, for a remodel, is that the right product? Because here's the other thing, Eric. A lot of people are told by their parents, myself included, you want a fixed rate. You want a 30-year fixed rate.
Yeah.
If I'm buying a house to remodel, a 30-year fixed rate probably isn't the right product. Because again, you're going to go in and make changes. You don't want to have to jump through all the hoops of a perfect house that's ready to go to the secondary market. That's not what he purchased. That's not what he wanted.
Okay.
So in my opinion, maybe that was a case where a 30-year product, 30-year loan isn't right for you at this time. Maybe, excuse me, maybe what you need is an interim loan, right? You purchased the house. We're not selling it to the secondary market, so we acknowledge there may be some work that needs to be done. We're going to talk about that, right? How much is that going to cost? How are you going to fund it? Are you capable of doing it yourself? We take a lot of customers in that situation, and we will do a loan that we keep on our books. Yep. To Brad's point, an ARM or adjustable rate or a balloon rate or something shorter term to allow the borrower to get in without jumping through so many hoops.
Right.
Make those needed repairs, and then once it's done, refinance at that point. Refinance it into a fixed rate, because all the work is done. You shouldn't have any issues on appraisals.
Okay.
So sometimes it's just, are we trying to fit a round peg in a square hole, right?
Yeah, well,
and why are we trying so hard to do that when there is a better vehicle to accomplish what you need?
And that makes great sense, right? And so that's going to be up to like the individual purchaser and scenario and what. I mean, you guys are still in that instance. You guys are assuming some risk.
We are.
In it. So what? I mean, are there certain qualifications or guidelines to determine if that borrower would qualify for something like that?
Very similar, right? Again, it's typically, if you're going to qualify for a fixed rate loan, you're probably going to qualify for an in-house loan.
Okay.
Right? Again, it goes back to trying to understand, and not everybody has the ability to offer those short-term loans, right? A lot of companies only offer a loan that they can sell.
Sure.
Right? And without that, they don't have that short-term vehicle, right? That's why, I enjoy working for a local bank, because it gives me those tools.
A little more flexibility.
Right.
Yeah.
Now, that being said, I think there are advantages to both sides, right? I've worked in mortgage companies, I've worked in local banks. Mm-hmm. There's a reason Brad and I, after 30 years in the industry, are at a local bank, right?
Yeah.
We can maneuver better, we have more tools to solve more problems, right?
Yeah.
So, I think what it does, Eric, is it takes that appraisal piece out of the question. If we have to have a borrower who meets credit guidelines, and we have to have a property or collateral that meets guidelines as well. And again, if you think about it, it makes sense. Buyer and seller are in full agreement on an as-is appraisal.
Right.
Fannie Mae and Freddie Mac, nationwide facilities, Washington, D.C., they don't know me, they don't know you, they don't know buyer or seller. And so the promise that it'll get taken care of afterwards, they've been burned so many times. It
means nothing.
That they're numb to that.
And we've all seen it. Like I've sold so many houses where my buyers, and then we'll do this and we'll do that and we'll do this.
Sure.
And then, 5 years later, they call, hey, we're ready to list our house. And I go over there and I go, wait, weren't you going to, hold on. We didn't do any of that stuff, man, but we need, we want a lot more money for this house than we paid for it.
I say that all the time. The misbehavior of a few are what creates all the rules for the rest of us.
Yep.
Right?
Yep.
Because those broken promises have happened so many times that now that we don't have that avenue available. Right?
Yeah.
It's all, what can you prove? What did you do? Show me on paper. Right?
Yeah, and I hate to defend a big entity like Fannie and Freddie are and things, but they see that hole in the ceiling and go, wait a minute. What's going on that there's a hole in the ceiling? Is the roof leaking? Is there something that caused that? So is there something that's deteriorating our collateral? And that's what they want to check out. And I don't say they're wrong on that, because that is unusual. We don't have holes in ceilings normally. So they just want it checked out a little bit further.
Yeah.
So
and
fair enough.
And the fix for those things was incredibly easy.
Yeah.
And
Most of the
done
time.
over a weekend by just a person.
Yeah, and that's okay. Yeah, that's okay. But they see those things on there. Now there are some safety issues, though.
Sure.
If you see something electrical related, we're not letting that close. I mean, that's the big ones and things on there. Is if there's anything really safety related, we're going to say, wait a minute, we got to stop on this thing until we get things.
And that's always been the case, right? I
Right.
mean, I'm critical of AI because I think AI is used to nitpick. Right?
Yes.
We have always had the standards of health and safety features have to be addressed, right? Regardless of the loan program. And that is twofold, right? We do want to protect the buyer. The buyer is counting on the appraiser and the bank to point out glaring issues.
Yeah.
Right? That is our customer, right? And that's who we are accountable for. So those features have always been in place. There is the collateral piece too, right? Obviously, the house secures the loan. The house has to be marketable, right? Again, this gentleman bought the house with a hole in the roof and questionable substance on the wall.
Right.
If that home gets foreclosed and me and my wife go to look at it, I'm betting my wife is gonna not be interested in that house.
Right.
So that's the other side of it, is if that is being taken as collateral, it has to be marketable to others. And the more problems there are with that house, the less marketable it is.
Yeah.
And then the secondary market has a house that they can't get rid of, right? That they cannot resell to another buyer if that first buyer doesn't make the payments on the loan.
That all makes sense, and I want to lead into a different part of this because I told you I had two examples.
Okay.
Sure.
Right? And the first one was what happened with the appraisal. We had a deal in place, everybody agreed, but then the appraisal happened and flags went up.
Yep.
Now I had another one where it was a disclosure issue, right? So in the disclosures, the seller had disclosed that the potential of high radon exists because they had bought the house a year ago, tested for radon. It came back high. They didn't care. They moved forward and bought the house. But then when he goes to list it a year later, he disclosed, potential of high radon exists. We did test a year ago. It was high. We didn't care. We bought the house anyway. We never got it mitigated. So there you go. Now it's been disclosed. So I had the buyer, conventional loan. He looked at that and said, I don't care about that either. I'll put in a mitigation system later. It was a multiple offer situation. So did not ask for mitigation in order to get the house himself. And he did. So he gets the house. So everything's hunky-dory. We're moving along. And then all of a sudden, it hits underwriting and they say, wait a minute. It says right here in the disclosures that there's high radon. We need a mitigation system installed and we need a test showing that it's doing its job. We need to see the low level of radon before this closes. And this all happened, maybe a week and a half before closing. All of a sudden so I'm scrambling, I'm calling in favors. Hey, I need you to get this system in like now, and my buyer had to foot the bill for that because we agreed to buy it like that. This is not on the seller. And so now our financing said, whoa, 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 look at the disclosures. And so that's what's, I think, caused a lot of people a little bit of fear, is like, oh, wait a minute, are disclosures going to start being scanned now? And then are any defects potentially disclosed going to need to be remedied before we close? So have you guys seen things like that popping up?
Yeah, only because I have seen those disclosures come back and haunt us as the banks.
Sure.
Right? Because here's a classic one. You look at it. Let me go back to your first example, the 100-year-old house.
Yeah.
We have a lot of 100 and 150-year-old homes in Springfield with 150-year-old brick foundations.
Yeah, we're going to get,
we
were going to get there.
The most common disclosure I see, some water in the basement when it rains.
Yeah.
Seepage in the basement
heavy
during heavy spring rains. That's like
It's weird that every seller seems to
copy and paste the same terminology. But that's a common one. So, I have seen repurchase requests come back and say, here is your appraisal. Mm-hmm. Note the water in the picture. Here is your disclosure. Note the seller's disclosure. Tell me what you did to mitigate that issue. Tell me what you did. Show me your due diligence to say that why you felt that wasn't a problem and didn't have to be addressed. Because to answer your question, yes, those are looked at. Mm-hmm. And then it's a question of, is this something that rises to the level that we would have to question? Right. So it is that part is a judgment call, Eric. So we're looking, and I'll be honest, if I see that line, and the buyer has seen it too. So I think, first of all, the disclosures are absolutely critical. I would want the seller. You've lived in that home. You know that home better than anybody. You know it better than the bank, the appraiser, better than the realtor, right? Mm-hmm. Oh, You've lived there for 10 years. I can tell you which cabinet squeaks and which one doesn't. Yep. Mm-hmm. So as the seller, I appreciate you passing that information to the buyer, right? These are the things I've noticed over my time here. Shouldn't scare you away. I just want to make sure you're aware of it, so maybe you can deal with it later. I absolutely think that's a critical piece. I also think it's very unfair that transfer of information from buyer and seller gets used against everyone.
Yes. Yeah.
Because it gets used against us, right? And it goes to the appraiser. And again, that's difficult for the appraiser. If I see a known defect, I'm looking for that defect. I'm no longer going in there objectively.
Right.
I am looking now for water in the basement. Because you said there might be some, right? So personally, do I wish there could be that disclosure that stayed private between buyer and seller? Absolutely. End of the day, it is part of the contract. Yeah. And so we will always require every single page. I was asked that question last week. Well, can we just not send that? Appreciate what you're saying, Greg. Can we just not send you the disclosure?
That came up again today. The disclosures are part of the contract,
and that's the thing. If I'm missing pages of a contract, that's critical information.
And we need to remember who the buyer we define as the person taking out the loan to buy the house, but they're not really the buyer.
Right.
They're not the one really cutting the check here in the right now.
Yes.
In the immediate sense.
I understand. They're taking on the debt, but they're not providing the money.
Exactly. They're not providing the money. So then those disclosures need to be made public to anybody with a vested interest in the property. So legally, I would think.
Yeah. And was the rate on disclosure? Did it mark?
Yeah.
That it was high on that as well. Not just, okay.
Yeah, not just the residential real property, but also the rate on disclosure.
Yeah, I think that would cause a problem.
Yeah, well.
Because it is one of those safety-related issues and things on there. I don't know if I've ever gone back and had it retested after somebody had put a system in. I think there's, if I remember correct, and somebody will correct me, I'm sure, on this, but I think they, I don't want to say guarantee, but warranty it.
They do.
For a certain period. So I would be comfortable with that. I think locally.
No, my first
look at that.
question was, did they retest?
Yeah.
They did retest.
That was a requirement as well.
You mean before they installed?
Oh, no.
Yeah.
Because that would mean, to me, that would be the obvious. Okay, it tested high years ago. I would assume it's probably
a year
still high.
ago.
A year ago.
Yeah.
But to me, the initial response, again, Eric, I think we're all trying to do a good job, so there's some judgment involved, right? So to me, if that question hits my desk, did we retest? Again, I'm not saying it magically went away, but I also didn't see that test a year ago.
Radon levels fluctuate, so it very well could have. And the pits had been
Rains
sealed
or
since
whatever.
then,
Yeah.
and so there was a good chance it was low. Now, this was a decision my buyer had to make. Was, do I just pay the whatever it is, $150 for a retest and hope it comes in low,
fix it.
or put in
fix
the
it.
mitigation system? And
Fair.
because
That's fair.
if it came back high, well, now he's still got to
Out
put in the
150
mitigation system,
plus.
and then still has to pay to
That's
test
fair.
it again after. So he said, you know what, I'm just going to put the system in. And that way I'll never have to worry if I go to sell it at some point.
I was thinking the same thing.
You know what I mean? So it was
That's smart.
Yeah.
But I think that's the hard part is yes, 100%. We look at those things because those things will be used against us
Yeah.
in the audit process. So, it's eyes wide open, right? Buyer, these are the things you need to be aware of. Bank who's taking this as collateral, these are the things you need to be aware of too, right? It's not fair to say, oh, it's only important to the buyer, but the guy who's, the bank, again, it's different because it's a bank, right? People
Right.
don't worry necessarily about protecting a bank. But that is the other side of it. Like, we have to protect the bank to say, is this going to be a problem?
Yeah.
Is this going to be a problem either for the buyer? Because the other thing that sometimes happens is you don't call something out. That person buys the house. If there's something significantly wrong, financially that could devastate that borrower. So now
Sure.
instead of putting you into your dream house, I put you into your nightmare that you can't afford to fix. Right. And so there is truly some looking out for the buyer and making sure that, again, it's in our best interest. Not only do I want you to be successful in this house, I want you to be able to make the payments and pay it off and enjoy your home.
And no, of course. I mean, that's what we're all working for.
Sure.
Best interest are, your clients are my clients. It's
Absolutely.
the same people, and we want what's best. The question, the thing that I think has most realtors concerned and wondering about is, okay, if we are scanning disclosures, how are we to show that in a 150-year-old house with a brick foundation, there's, without putting in a tens of thousands of dollar just waterproofing system, how are we to show that we've corrected the seepage issue? Is this going to be flagged on every single one of these houses that we try to sell?
Yeah, and I don't know. I'll interrupt, and I'm sorry,
No,
but
you're good.
Fine.
I don't know if we're necessarily looking for correction unless there is a structural issue with that.
Right.
Because we understand. For years, my office was off of MacArthur Boulevard. In that area, you see every house with that disclosure listed.
Yeah,
and
all
things
of
on
them.
there. And we'll still do the loan. We just want somebody that we know, love, and trust to look at that, which is not necessarily a structural engineer.
Yeah.
We're not going that far and saying
But a
we need to get an
contractor.
engineer, but a contractor who's in business, not just Uncle Joe who did side work, in his youth, looking at, it's good to go. We want somebody with something behind them.
Yeah,
to
my
say,
uncle used to have a work trailer. It's fine.
Exactly,
Yeah.
exactly. But we want somebody to look at it and go, you know what? It's seepage. It's normal. Foundation's intact. It's good to go. You're fine.
But the whole theme of today is it's not really. I mean, you guys are making the call now, but you're doing that and looking ahead to, is this going to be a problem with the secondary market? So is that going to be a problem with the secondary market? Is Fannie or Freddie going to see that disclosure later and say, hey, buy this back because there's a wet basement and you guys didn't require?
No, we'll deliver it with that. And if they ask about it, we've got documentation to show.
Okay.
Yeah, we've addressed it. Where you get caught is when you don't address a problem, right?
Right.
When we go in there and we go, I didn't see anything, cross my fingers, send it through. There are bankers who do that, right?
So
Again,
we don't think there will be a requirement of this needs to be a dry basement.
well, but here's the other side that happens, right? Again, if we go back to when Brad and I started, 3 pictures on the appraisal, and now there's a picture and
The good
everyone.
old days.
Here's the other thing that happens. And again, I no intention to bash an appraiser. They are our partners. We work with them. These are their requirements.
There's a few of them when we quit recording, we'll bash a few.
We'll talk about it.
Yeah.
But again, it used to be the requirement was front of the house, back of the house, street scene.
Yeah.
Now the appraiser is required to capture every single room in the house, right? Outbuildings, garage, attic, basement. Their job is to provide a good review of that whole property.
Yeah.
Right?
Absolutely.
The other thing that happens, again, because they are inspecting the house on behalf of the bank, I haven't seen this home. They are also pointing out things that are potential concerns. So we get a zoomed in picture of the hole in the ceiling.
Yeah.
Or of the mystery black stuff on the bathroom.
We're doing a good job of dancing around that substance there.
But because everybody does their job so well, it's a domino effect, right? It gets disclosed on the disclosure as a potential concern. The appraiser goes out and takes pictures, and then guess what? Oh, yeah, I'm a little concerned about that too. Let me zoom in real tight on this. Again, keep in mind, we are required to upload every appraisal to Freddie and Fannie. Then AI, so what's happening is they're showing us the problem without requiring it to be fixed, right? If I'm the appraiser, I'm not going to require it. I'm just going to make sure that the bank that hired me knows that this is an issue. But by documenting that there's a problem, I am now forced to recognize the issue.
Sure.
Now, if I do nothing, then shame on me. I deserve to be questioned later, right? There was a concern.
It was brought to your attention.
Did you just shoot from the hip and say that looked good? Or did you have someone go out there and tell you, you know what, I do this for a living. I've looked at this. This isn't a leak. This isn't, a structural problem. This is a 100-year-old basement that looks like it has another 100 years of life. We're fine.
Yeah.
Right? That is addressing the problem. So often it's not a spending money issue. All right, you've got to spend to have somebody go out and inspect it, right? But hopefully it's just that. And sometimes it's, hey, you know what? The downspouts go right along the foundation. You're running water into your own foundation. All you have to do is
put some extensions.
Is direct the water away.
Clean your gutters out and put some,
Maybe we have, maybe the pitch towards the house is draining towards the house. Again, that's something as a buyer that's helpful to me. If I correct that, my foundation lasts longer.
Yeah.
So it's truly trying to find out, is this a problem? Is this not a problem? We are hoping it's not a problem. But we're going into it and we're going to make sure that it's not, so that both we can assure the buyer of the house, and should we get questioned by the people who check us, we can say, absolutely, we did our due diligence. Here's what we did. Here's what we determined and why we felt like we were okay.
I had mentioned in my specific scenarios, these things popped up very late in the transaction, right? And then it left us scrambling. Like I said, it's those of us that have been doing this a long time, and we've got good connections and with almost all of our affiliates, right? I've got lenders I know I can count on. I've got inspectors I know I can, hey, I need a huge favor. Like tomorrow, and they'll do it, and same with contractors and radon guys and all of that stuff. But if I didn't have those connections, we would be in trouble when we get put in those pinches that, hey, we're supposed to close in a week and a half, and now we've got this issue that we need something done, and these things can't be done overnight typically. So one of the things asked today was, do you think that we'll get to a point maybe in the process where the contract and everything involved hits the underwriter's desk like quick before the appraisal even gets ordered, so maybe these things can get kind of noticed on the front end and dealt with quickly before even sending an appraiser out there and spending that money, right? Because the underwriter is gonna see some things and flag it. So if they can see our listing pictures and the contract and the disclosures ahead of time, maybe we can catch some of those things before we even hire an appraiser to go out there.
Yeah, I think I think it could help a little bit on
Could
there.
help or hurt, honestly.
Yeah, like I'll take the.
It's going to land there anyway, right?
Correct. Yeah, but like the seepage one, you'll see that a lot, and a lot of times we don't have to do anything. They can disclose it, but when the appraiser goes out there, it's a dry basement or something to that, and we don't want to spend your money unnecessarily. So we'll go, well, it was just rain, no big deal.
Right.
It is just seepage. It's not a foundational issue kind of thing. So even though the underwriter sees it, she or he is probably not going to flag it immediately just for that fact. Right. Now the radon piece, that
Sure.
I would have thought that would have hit somebody going, wait a minute. And I don't know where in the process where that was and things on there.
It was pretty late.
Yeah. So that one, maybe there's probably something we can work on to get better on those things. So that's a good point. But we do have our underwriters review the contract. Well, the loan officer actually is reviewing that contract and the disclosures
that's what I was gonna
immediately too. And if there is something really unusual in that, I'm hoping we're calling you.
Okay.
If not,
Yeah, that was
let me
just
know.
something brought up today, and it was like, okay, so I mean, we all. What we're talking about as realtors is like, all right, what can we get out in front of?
Yep.
And so working with you guys too, same kind of thing, right?
Yeah,
so we all
absolutely.
kind of have to adjust and say, okay, now we're seeing these things. This is popping up. Let's maybe take a good hard look at this
Yeah.
and know that before this becomes an issue later, we're already prepared and have the pieces in place and the speed dial
Yep.
ready
Yep.
and say, hey, listen, I might need you to go over and do this. Just
Yeah.
be on standby. Let's see what they say. But if we can start identifying these things sooner in the process, and we all kind of need to work together, I
Absolutely.
think, to do that.
And
Absolutely. It's a
that's the
huge
point of the
partnership.
conversation as well,
Right.
Making you aware of our perspective, because I think two things. Look, we are all. I said in the beginning, we are all about how do we make this transaction go faster, right? For
Sure.
the borrower, 30 days seems so long. Right. So the last thing I want to do is add another layer of bureaucracy in there. I don't want to assume every home has a problem and let me add another step to find
Right.
out what that problem is.
Yeah.
I mean, to your point, could I do that? Yes, we could do that. Would it slow down an already slow process and maybe cause some inspections that aren't required? Probably.
Yeah.
So instead, when we get the contract, so that everything is driven off of the sales contract. When the sales contract is provided to us, we order the appraisal that day.
Yeah.
Right? We don't even wait, to be honest with you, Eric, we don't wait to see if the loan's approved yet. We still are collecting bank statements and check stubs and all of the things, right, that we would normally do. We don't want to wait. We're ordering appraisal that very first day, and we're putting a time request on that, right?
Yep.
We need to have that back in 7 days, 10 days.
Sure.
Whatever, a reasonable amount of time, because the appraisers are getting a lot of
Yeah, they're
different
busy
orders.
too. They can't just come out day later and do the appraisal.
That-
So you have to get it ordered. Sure.
Most likely, that appraiser is not just working for INB, they're working for Bank of Springfield and several other banks, right?
Yeah.
So, they're juggling that workload. But so what we're trying to do is let's get that appraisal order out as fast as we can so that we can get it back in as fast as we can. And then immediately, to your point, we are looking to see if there's any issues, right?
Okay.
Even before an underwriter sees it, we are, everyone involved in the process kind of knows trouble spots to look for.
Yeah.
So that we can escalate that. The last thing I want to do is sit on a time bomb.
Yeah.
Right? If there is a problem in that appraisal, I want to address it the minute the appraisal comes in. I don't want to sit on that for 2 weeks and then go, hey, Eric, I know we're supposed to close next week, but I just realized this is a problem.
Yeah.
Right? I think it's always, so I think we do our best to make sure that our proof source is the appraisal, nothing else, right? You don't want me to impose my own rules. It's hard enough as it is already.
Yeah.
So the proof source is the appraisal. Let's get the proof source as quick as we can, and then let's review it and share it as quickly as we can. And that's why that same thing, we're turning those around very quickly, sharing them with the buyers so that the buyer gets a copy prior to closing. If there are any issues with condition of the property, value of the property, right? Because that's the other thing I think that we're experiencing right now is the shortage of supply of homes is forcing higher selling prices, right? Supply and demand.
Yeah.
People are willing to pay more because there's only a few houses.
Oh yeah, no, it's been the last 5 years
It
for all of us.
probably takes 6
navigating
months to
through
a
that.
year to buy a house,
Yeah.
to get your house.
Absolutely.
So the valuations have been an issue. Things are selling for higher than they traditionally have.
Yeah.
And so sometimes it's not the hole in the ceiling or the water in the basement. Sometimes it's absolutely beautiful. And again, buyer and sellers have agreed on a price that a black box in Washington, D.C. tells me is overvalued.
Uh-huh.
And it's
Well, they
almost like,
know. I
I
mean, they
dare
know
you
best.
to deliver this loan.
Yeah.
Right? And that happens too. So I think, I think the challenge on appraisals is that it is automation and oversight that have taken a lot of local decision making out of this, right? Again, I think the value, and I think that's dangerous because I think the banks, the appraisers, and the realtors know our local markets better than the bureaucrats.
Yes.
Right? Now, it's not just bureaucrats. It's, to be honest with you, there is a lot of data, right? The technology today is all about collecting data. If you think about, there are 2 agencies that provide the majority of fixed rate financing and have since, Brad said, the 30s, okay? But even if you think the last 10 or 15 years when technology has really been clicking, they have appraisals on almost every property in the United States on record,
Yeah.
probably multiple appraisals.
Probably.
And that happens as well. We will submit the appraisal and we will get something back that says, hey, the last 2 appraisers said this house had different square footage. The last 2 appraisers said this one didn't have a lake view, but your guy is saying it has a lake view and has added value.
Right.
And so that
I got a nice one with a lake view right now. If you guys know
we saw
anything.
it's amazing.
Yeah.
Yes, I have seen that.
Yeah.
I'm very envious.
Yeah.
But yes, I mean, so again, it is technology and efficiency are amazing. It is the things that we adopt in our everyday lives to make things easier and faster.
Yes.
It's not always a good thing, right? It's the same thing. We give up a lot. I give up a lot of privacy so that I have this in my pocket.
Yeah.
Right?
Yeah, yeah.
To answer all my questions. But I also give up a lot to have this in my pocket, right? And so it's kind of the same thing. The technology advances have allowed us to close complicated transactions in less time than before. And that's a great thing, right?
Yeah.
We always say that. When technology works, it's amazing. When it doesn't, it's the biggest frustration. Yeah. And so it's both being used to make us better and being used to keep us on our toes.
And the flip side, like you said, is the amount of data we're putting out there, which leads into probably the last thing I'm going to talk about, so we can get you to your appointment here. So, a big concern of ours now, because you've seen it a lot in the last 5 years, pre-inspection reports, right? And it's become a point where we typically upload them into the MLS along with the disclosures.
Yeah.
And so we are making these pre-inspection reports as accessible as possible.
I love that.
Yeah, right.
Yeah.
But so is that maybe a little one of these instances where it's oversharing? So when we upload them, or when we write an offer and then attach with the offer a repair addendum based on a pre-inspection report, and we check the box as a buyer that says we've seen and reviewed the seller's pre-inspection report. Are there instances where underwriting or even Fannie or Freddie say, I see here, this has a pre-inspection report, I'm going to need to take a look at that?
No. In fact, for 30 years I've been doing this, I have both. I have recommended a home inspection.
Sure.
And I've told the buyer I don't want to see it.
Right.
Because that's not for me as the bank. I think it's a smart look. I think there are a lot of things that could go wrong in a home.
Yes.
Right? And again, I am relying on the honesty of a seller to provide that information to me on the disclosure. If they don't, an inspection, an appraisal is great for evaluation. An inspection is more a punch list of things that this house could use, right? And in my mind, as a buyer, that's exactly what that is. Yeah. It's a punch list that over the next 10 years, you can use to address things that could be a problem in your home.
Yeah.
But that's not for me as the lender to determine the valuation. Again, value is one thing, punch list is the other. Now, here's the exception. I never want to see that appraisal report, but
Inspection report.
I'm sorry, the inspection. But if the appraiser calls out something, right? If the appraiser says, you know what? That roof looks old to me. I recommend somebody gets up there and take a look at it. There are times I might reach out and say, was an inspection done? Could I have the page?
Just that page, yeah.
That addresses the roof, because it serves as an inspection, whether it was done by, a contractor, a home inspector, both very qualified people to make a judgment call on that roof. So that might save us from that contractor running out.
Yeah.
But again, I only want to see that one page, because as soon as you tell, it's human nature, right? You can't forget about something. Once you see a list of items that are potential problems, that is in the back of your mind is going to influence your decision. Again, that information is not provided for the bank.
Right.
But there are times we will use that
A specific page pertaining to something.
to address a concern.
Of course.
Yeah. It's that old perfect's the enemy of good, right?
Yeah.
Where the home inspector is out there and he's looking for, this should be perfect. We're not looking for perfect. We're
Right.
looking for good. Yeah. Is it good to go? Is it sturdy? Is it structurally sound? Is it safe?
Yeah.
So
I think the concern amongst our community, though, is when you say that, okay, well, Fannie and Freddie are scanning everything now with AI, a full audit of everything with AI. So when they see these contracts,
Are they going to pull
and
that?
they see, are they going to pull? So not that you guys have seen as of yet, this hasn't happened, but the potential exists, because now we don't just upload them, at least in our contracts locally, like I mentioned, we don't just upload them to the listing in the document section. There's a box on the purchase contracts. We acknowledge it on the purchase contract that there is an existing inspection report on this property that I, as the buyer, have viewed.
Yeah.
And so does the potential exist when this gets scanned in the secondary market? And maybe this is something now for you guys to look out for, because it could then come back where they say, well,
yeah, we'd
like to see this.
We heard a little bit that last week and things on there, and I wasn't aware you guys did that and things on there. I would be very careful. I would think it's still a private individual. It's done for. You can't just go out there and grab documents that aren't belonging to you, and that's what that would be doing. So I don't think that that's out there yet. But
I was going to say,
is the potential there? Sure.
Well, we're making them publicly when we upload them to our documents. That's been the big talk, is maybe now we can acknowledge in the agent remarks that one exists, and then send it individually to the agents who show it, who have an interested buyer, and maybe not just upload it so that they're publicly accessible documents.
I understand that response. It's disappointing, right? Because I think the intention is genuine.
Of course.
And I love that, right?
Yeah.
Because again, in this environment, it's difficult for buyers to ask for an inspection, because that might be an obstacle that the seller doesn't want to deal with.
Yeah.
So the fact that you put that out there, to me, is a fantastic tool. And the fact that you have to shield it so that it can't be used against you,
it's
feels wrong.
Yeah.
But that being said, Eric, I don't know what they're pulling. Like, I know from reading articles that it's referenced that some of the comparable photos are being pulled from the MLS.
Yes.
So if that is being disclosed to us, are the documents, is the access to the documents the same as the actual, the photos? I can't tell you. And so, I guess I can't reassure you that they won't be.
Right.
Right now, just because you marked the box that there was an inspection, we as a bank at INB would not ask for that inspection. Okay. Again, my opinion, that is for the buyer exclusively.
Right.
Would Freddie and Fannie, would big tech pull that off of there and use it against you? There's a lot of data stuff that is very unfair. So it's a reasonable concern.
Okay. Yeah, and that's we just get to thinking of everything that potentially could go wrong.
No, I understand.
And I think that's the best way to do it, is we try to imagine every potential scenario and how it could unfold so that we can, get out in front of things and make things easier for our clients.
I appreciate that.
So that's something, just so you guys know, that we've been talking about is, okay, what do we do with this? Because if they're going to use AI to scan everything, and are they going and are they looking at Zillow? I mean, obviously they whatever you guys give them, they look at, but are they going above and beyond? Are they looking at our listings in Zillow and scanning that too? Are they accessing every piece of public information that is out there on this to potentially, protect their assets a little bit? So that's those are the concerns that we're all kind of kicking around. So
it's fair. The point of the conversation was not to scare people or to cause panic or to change the way you do business.
That's just our default mindset.
It is. It's like, I understand.
It's fair, though.
Trust me, every time they come out with the new disclosure requirements, the bank goes, we don't know how to do this.
Right.
Like, and okay, related topic. August of last year, there was a new disclosure required called the reconsideration of value.
Mm-hmm. Yep.
Right? That does address a little bit of what we're talking about, right? There is now a path for buyers to question the appraisal, right? That wasn't there before. We entertained questions, right? Obviously, if something doesn't appraise, people have questions, and we would address that. If there's a repair, people have questions, and we address that. But now there's actually a formal document that's provided to every borrower. It's provided both up front, and then when I told you we deliver the appraisal mid-transaction, that form is with it. And what that form allows you to do as a buyer is object to anything in that appraisal report. Now, it could be someone feels they were discriminated against, right? It could be that they don't like the value and they think that the comparables that the appraiser used were not the best comparables. There has to be a reason. It can't just be, I don't like it. Right? It has to be, I don't like it based on the following, right? I feel like that wasn't fair. I feel like the wrong house was, comparable homes were used. There is a path now, at least, for buyers to be able to take that avenue and formally object to the bank, and then we will review it, and if there's merit, we are sending it to the appraiser. And guess what? The appraiser has to address it. He doesn't necessarily have to change his appraisal.
Right.
He does at least have to acknowledge that, okay, I was challenged on my comparables. Here's either why I didn't use them, or I've also seen some say, you know what? Those are pretty good comps. Let me add one or two of those and see if it helps. So, that's the same thing, right? So there are changes all the time. Some of them work in our favor. Right? Some of them are used to check against us. But in either case, there's always this obstacle, this hill that we feel like we got to climb that doesn't seem climbable. Next year, we're not going to be worried about AI looking at appraisals because we're going to be used to AI.
It's just going to be the norm.
To the next thing, which is, what are they checking now?
It's an ever-evolving and ever-changing industry for all of us, and the best thing we can do is educate ourselves so that we can educate our clients, so that we can know what to expect and set expectations and be ready to navigate through this stuff as it kind of arises. So that's all we can do, and that's what we're doing here. Is just we're not necessarily looking for answers. We're just identifying things and talking through them a little bit to kind of help people out. So, gentlemen, I'm going to let you get out of here. You've given me an hour and 10 minutes of your life, and I appreciate it. After you came and did the same last week here for everybody. So, from the entire Realtor community, we thank you guys for giving us your time and your knowledge.
Thanks for having us.
Call I&B. Everybody, I can vouch.
Appreciate it.
I can vouch.
Yes, sir.
Greg Formigoni, Brad Dyer. Thanks, gentlemen.
Thank you. Sir.